All right, now the markets are mixed. The Dow is down pretty heavy, and the Nasdaq has now turned green. And we've had a choppy market probably for the last few weeks. And where it goes, I have no clue. But in my opinion, it's probably going to move higher. They're going to keep some type of fire, some type of hand under this market up until the election. Now, not really too much big data today, but we have the CPI coming out tomorrow. Also, we have the Fed. They're going to make their rate decision tomorrow, and they're not going to cut rates. But what you might see is the Fed regurgitate the same rhetoric that they've been saying for the past year. And that's going to be, they're going to cut rates at some point, but inflation is just too high. Now, when they do that, well, they usually send commodities soaring, and you're probably going to see gold and silver probably take off. And we also might see a bump in oil. Now, in the past few days, we've seen oil reverse course and turn back up. And Brent crude is over $82 a barrel. WTI is over $78 a barrel. Now, it looks like we're going to have, or at least the models are predicting, we're going to have a tropical storm, some type of tropical cyclone traversing the Gulf of Mexico into the eastern Gulf of Mexico, into the western Gulf of Mexico next week. And what is that going to do for oil? Well, you have a lot of oil platforms out there in the western Gulf, and that's probably going to cause a lot of input of production. And once that happens, you're going to see a spike in oil, most likely. So that's something to keep an eye on. Now, this economy has really been blessed this year so far because oil has remained muted. The price of oil has stayed down. But how much longer can that last? Who knows? Because I tell you, if oil turns up $10, $15 a barrel, this economy, which is already bent over, crawling on its knees, is going to be in big trouble. And remember, folks, they're telling us, the media, the government is telling us, these are the good times. The economy is doing great. And we have so many people on the edge right now. Now, over the weekend, I was looking at some of these eviction filing metrics. And if you just put Phoenix, Arizona, which just saw 7,100 eviction filings last month, in Denver, Colorado, which saw over 5,000 eviction filings in 1 month, that's more than 500 households getting an eviction notice every day. And the average amount owed is more than $3,400. So there's a good likelihood that many of these families, many of these people are hitting the streets. And you add those numbers up, that's more than 10,000 people who might be becoming homeless every month. And that's just from 2 cities, folks. And I'm here on the East Coast, and hey, you play around and miss your rent in a few of these cities other than New York. In New York, you can kind of get a reprieve, and there are many nonprofits that will help you stay in your home. But a lot of these other cities, Philly, Baltimore, DC, Richmond, hey, you missed that rent one time, man, you got about 30, 45 days, and you're going to be out on the streets. Now, in the past month or two, we've actually seen some of the regional bank stocks flatline, plateau at least, and some of them even rising. We saw New York Community Bank's stock actually rise after their last earnings by more than 30%. Now, that stock has since drifted all the way back almost to $3. Now, today it's doing pretty good. It's up a few percentage points. But back when New York Community Bank was having its struggles, many analysts, many economists would turn to National Valley Bank and point to that bank and say, hey, look at the balance sheet here. Look at this stock's performance. The regional banks are not in that much of a crisis. Well, now, National Valley Bank, if looking at their stock and using their stock as a barometer to how well this regional bank is doing, well, it's at a 52-week low today, and this stock is down almost 15% in the last month. And many people have wiped their forehead and figured the regional bank crisis was over, but it's not. The commercial real estate loan debacle continues to build. And at some point, this dam is going to burst. The dominoes are going to fall, and you're going to see a lot of these banks go under. Now, the Fed has already come out and said they're expecting more than 60 regional banks to fail this year. And my guess is probably going to be more, but that's for another video. Now, the headlines, the news out of the media, the news from the government, all of it looks rosy. All of it looks great. But again, there's a good percentage of this country that is just getting by, that is struggling. And I'm not so sure how long this stock market, this rising stock market, is going to be able to hold everything up. The glue to this house of cards is beginning to peel. And I tell you, all it's going to take is a light breeze, and this whole thing is going to come tumbling down. Now, on the earnings front, this is a pretty light week for earnings. I believe we have Oracle or Adobe one of these days this week, but there isn't much on the earnings front. Now, we'll see what this stock market does. Tomorrow's going to be the big day, but even then, I don't expect anything out of the ordinary, unexpected. This quick stock market commentary, please like and subscribe.